Not just finance people, just regular people in the regular economy. I get the sense that a lot of people are having a really rough time right now, and they're not quite sure why. They know something's wrong, but they don't spend. I've spent decades looking at markets and economics and conditions and investing. And if you haven't done that, it's really hard to figure out what's happening. And people have this sense that something is really wrong. And so, what I want to tell people is, yeah, there is something really wrong. Let's talk about history for a little bit, Matt, because and then we'll get to how that history applies to what we have now. There were two big events that caused the pain that people have at the moment. One is the creation of the Federal Reserve in the early 1900s. The other was the 1971 decision by President Nixon to take the U.S. off the gold standard. Now, the reason Nixon had to do that was because the United States had printed so many dollars that it exceeded the gold that we had in the Federal Reserve Bank in New York and in Fort Knox. We didn't have enough gold to back dollars.
Before we jump into this episode, please subscribe to this podcast, hit that notification bell if you're on YouTube, and after a listen, please give us a thumbs up, like, and share, if we've earned it. With your help, we can reach more people and deliver these valuable from the trenches lessons to those that need it. Enjoy the episode. Hello, everybody, and welcome to another The Builders. Today, we are joined by Gary Brode. Welcome to the show, Gary.
Thanks, Matt. Good to be here. I appreciate the invitation.
Now, Gary, from my notes, for what I know about you, you're the managing partner of Deep Knowledge Investing. You help individuals do better with stocks, maybe working with hedge funds, individuals. Who do you work with?
So we work with hedge funds, portfolio managers, registered investment advisors, family offices, and individuals, including people who may have, a few tens of thousands of dollars in a Schwab account or an E-Trade account. And we help them get better returns in the stock market. We do that two different ways. One, I have a 30-year background in the hedge fund business. I've always been a stock picker, a money maker. So by telling people what I'm investing in my own account and why has been a great way for them to piggyback off of my stock picking and to make money in that way. And then we've also been very successful in using a macro overlay to figure out exposures and positioning. And that's just a fancy way of saying that when we have big events like we've all experienced, like the COVID shutdowns, the massive inflation we started to see in late 21 and early 22, Federal Reserve rate hikes that lasted much longer than most people thought they would. We've been on top of that and helped people hedge for it. Again, that's just a fancy way of saying we helped people prepare for the negative events that were coming by either reducing their exposure or shorting something or buying put options or doing defensive things like owning gold or Bitcoin or energy. We found all kinds of ways to successfully help people navigate through markets that a lot of people refer to as bad markets. And, I don't love when people say, well, we had bad returns. You had bad returns. I got you bad returns because it was a bad market. No, it's not. You get the market you get. It is our job to figure out what to do with that. And, a bad market, meaning, so if the market is going down, we still should be able to make money, right? We can short things, we can lower exposure, we can buy things that will benefit from things like inflation or rate hikes, the things that have made us all uncomfortable over the last few years. Those are the kinds of markets we're really good at navigating for people.
Nicely said. Way better than I could have said that.
Well, I'm practicing telling people what I do because, they're perfect. Curious.
That's perfect. So before we get into your story, because the first thing we do on The Builders is when we have somebody on for the first time, we like to kind of hear about your journey, what that origin story looks like, how you ended up doing the things you're doing today. It sounds like already that you've had a long journey with a lot of interesting things that probably happened along the way. And just kind of figure out, what influenced you to do what you're doing today. And but before we do that, or after we do that, we're probably going to get into some things today that are a little darker. We're going to be talking about the economy a little bit and how things can be tough and maybe are tough for people right now. But as we go through that and we find our way through that and kind of agree to, just say that this is the way things are. But at the back end of that, we're going to have a positive ending, a landing, where we can talk about how you can ride those things out or how you can approach what you're doing, whether that's life, business, or whatever, and be resilient and find your way through that. So we're going to land on a positive note, even though it might get a little bit dark for a little while.
Yeah.
Is that right, Gary?
It is. Matt, I think it's so important as I talk to people, not just finance people, just regular people in the regular economy. I get the sense that a lot of people are having a really rough time right now, and they're not quite sure why. They know something's wrong, but, they don't I've spent decades looking at markets and economics and conditions and investing. And if you haven't done that, it's really hard to figure out what's happening. And people have this sense that something is really wrong. And so, what I want to tell people is, yeah, there is something really wrong. It's not just a weird feeling you have. Your feelings are not wrong. They are completely valid. They're reasonable. People have this sense that if you'll excuse the language, that they're getting screwed. And guess what? You are. And my goal for today is to help people understand what's happening and why it's happening. And that can be uncomfortable. So if you're listening to this, I'm going to ask you, let's just commit to spending the next, 45 minutes or hour together. And let's just commit to being willing to be uncomfortable while we look at what's happening in the economy. But I promise you, if you take that trip with me and you're willing to be uncomfortable looking at the way things are for a little bit, for just an hour, at the end, we'll talk about some practical things that you can do, whether you have a little bit of money or a lot of money, whether you have investable assets or not. We'll talk about some practical things you can do to protect your home, your savings, your investments, your retirement. There are things that can be done. Again, I don't believe in good markets or bad markets. And so, I promise you, if you're willing to take that uncomfortable trip with Matt and me today, we will make sure you end up with some things that you can do to protect yourself from what's happening.
Well said. Well, before we dive into that portion, let's take a few minutes and learn a little bit about Gary. So, where does that story start? Or that you can tell the long version, the short version, or the most interesting version, probably. I'll hand it over to you. Just tell us a little bit about yourself. So
the most interesting version actually started when I was in high school and got thrown out of the New York Stock Exchange. Yeah, really happened. I might have been a weird, quirky kid, but when I was in high school, this is back in the 1980s when there were all the big, mergers and acquisitions, the takeovers, investment bankers were like rock stars. You had all these unbelievable villains like Ivan Boesky and Michael Milken. And, I was fascinated by all of this. When I graduated from high school, as a graduation present, my dad said, okay, we're going to take a 4-day weekend to New York. And so, I grew up in the Detroit area in Michigan, and we got up early Thursday morning, took that 6 a.m. flight to LaGuardia. We landed at 8:30 in the morning, something like that, and dropped off our bags. My dad had been able to get someone's apartment on Park Avenue, which was really nice. And he said, okay, what's the first thing you want to do? And I told you, I was a quirky kid. I said, I want to go see the stock exchange. Don't ask me why as an 18-year-old, but I was fascinated. So we went. And, back in those days, this is pre-2001. It was pre-9/11. And so you could get into the building and you could stand there. There's this balcony overlooking the trading floor. And you could stand there. And I was watching all of this. The traders, this is, again, pre-electronic trading. All these traders down on the floor wearing these brightly colored jackets, yelling, screaming, waving their hands, throwing pieces of paper at each other. To me, it looked like a lot of fun. And it occurred to me that people who were good at it could make a lot of money. And I was interested in that. I like making money. It's, to me, that's fun. And so I was just standing there transfixed. And at some point, people came by and they said, listen, you guys have been here forever. Effectively, we were loitering. And they said, we're closing down. You need to leave. And so, at 18, I was thrown out of the New York Stock Exchange for loitering. But I was just fascinated. And then, went to the University of Michigan, and in my spare time started to read books on investing, books on investment banking, started reading the Wall Street Journal. Even though I was a political science major, I was taking classes in business, international business, statistics, accounting. I was taking accounting classes I didn't have the prerequisites for. I just wanted to learn as much of it as I could. And mostly doing this in my free time. And had a couple of finance internships. My first job out of undergrad was to do mergers and acquisitions at Morgan Stanley. It's one of those jobs where you work 80 to 100 hours a week, 52 weeks a year. You don't take time off, you don't sleep. But it was great training. And after that, I moved over to the buy side. I worked for Doug Hirsch at Smith Newcourt and then Seneca Capital, where we did risk arbitrage and event-driven special situations investing. I worked for a number of other funds where I did, concentrated long-only value investing. I did long-short equity. I ran a fund called Akita Capital where we did long-short investing. I ran Silver Arrow with a partner, Raji Kabaz, for 8 years, where we were concentrated long only with options-based hedging. It was just a way of reducing exposure, reducing risk. Our long return on invested capital beat the S&P 500 by almost 100 percentage points. We were money makers. We were alpha generators, which is just a fancy way of saying our stock picks beat the market. And then at the Jan 1, 2020, I launched Deep Knowledge Investing, where I take the exact same methodology that I used to make money for, hedge funds I worked for, hedge funds I ran, and now make those ideas and my thinking and that reasoning available to, both finance professionals and ordinary people. And the thing that we try to do is we assume that when we're talking to people that they're smart, but not finance people. So we try to give them, we don't talk down to people, we try to give them really clear explanations on what we're talking about and what we mean. And I'm really fortunate. Deep Knowledge Investing is a terrific community. The questions I get from my subscribers are fantastic. Our subscribers they're amateur investors, but they're smart, they're engaged, they're involved. They ask questions that I think, demonstrate they really know the subject matter well. And, the good ones, I respond to them and we put those posts up on the blog as new blog posts, because I assume if one person has a question, 10 people have the same question.
Wow. That's a very consistent journey. Like, I feel like you knew what you wanted to do, like when you were a teenager, like you figured it out. And either you love numbers or just when you were on that stock exchange, just falling in love with that whole idea. And then taking that forward through the years, doing all these different things in finance and that's incredible. What was the transition from starting Deep Knowledge? Like, how did that come about? Were you working for who were you working for before that? And then is this more along the lines of running a business, something that, what did that look like?
So we were running Silver Arrow prior to starting Deep Knowledge Investing. And, it was a fund, but we had good returns, but we'd been in business a long time. And, neither my partner nor I were great money raisers. We weren't great marketers. And in general, in the hedge fund business, you really need to start with a large amount of assets under management, because the asset allocators don't so much care about your returns in your process. They just want to be invested where they feel safe, and where they feel safe is where other people are invested. So they just want to follow other people into ideas. I understand it. But the fund was just too small given our returns. And so, we decided to shut it down. Raji and I, my partner, we remain the best of friends, and I'm very proud of the fact that when we returned our investors' capital, we returned more money to every single one of our investors than they had put with us. Nobody took a loss. Nice. And I'm really proud of that. I'm really proud of the fact that Raji and I remain the best of friends, and that we were able to deliver positive returns to 100% of our investors. When we returned their money, they got more back than they put in. And that's something I feel really good about.
So what's different with like Deep Knowledge? I mean, are you doing more on the consulting side of things, or are you still managing someone's portfolio? And
yeah, so
guiding?
I'm managing my own money, and we work really on it's on a subscription or consulting basis. People pay a monthly fee or an annual fee, and we've set it very low for individual investors. Obviously, the family offices and hedge funds who talk to me more frequently, we charge them more, but we charge very low rates for individuals. And, I maintain the blog where I have a list of my personal positions, and, I write up reports for people and explain to them my thinking. I follow them for people. So, when a company announces earnings, or maybe they have a refinancing or some sort of event, there will be a post up on the blog that day explaining, okay, everyone, we just had an event, we had earnings, here's what's happening, this is what's going on, this is where my opinion has changed or not changed. Often the answer is this confirms my thesis, and, sit tight, just give it time, we'll make money in it.
So you're a writer. You like to write on your blog and talk about what you find and your research and all that stuff.
Yeah, it's just a different expression of the idea. I spend the vast majority of my time looking for that next great investment idea. What I'm looking for are situations where the dominant narrative, I believe, is wrong. I'm looking for situations where the thing that everybody knows is true isn't, and I understand the reason why.
Gotcha.
It's that moment when, sort of, if you remember Raiders of the Lost Ark, when they have that moment, when they say they're digging in the wrong place, right? The staff was the wrong height, that they're digging in the wrong place. That's the moment that I live for. That moment when I realize, okay, here's where everyone's wrong. This is why, this is what's going on. Now, there aren't a ton of things like that. Everybody's not stupid. Everyone's not wrong all the time. I'm looking for a few things. Where just the narrative is wrong, and I understand the reason, and then I research it, I know it as well or better than anybody else, and take a position. And I'll tell my subscribers, we've just bought XYZ or ABC or whatever the company is, and I tell them, hey, a full report is coming, and we'll write up a full report, whether it's 5 pages, 10 pages, 20 pages, explaining the whole idea to them. And there are times like when things are complicated, like in a medical idea, or we've been involved in biometric security, we'll bring in, like, we'll do webinars for our people. If it's a medical thing, I'll bring in physicians from my board of advisors. We've done stuff in the cardiology space, where we'll bring in cardiologists to talk to them. We'll bring in management teams, and let Deep Knowledge Investing subscribers and people hear directly from people who can help explain the idea so they understand what they're investing in.
So what excites you more, the journey to the challenge of finding that next great thing to share, or the sharing? Do you love helping people and giving back?
So it's, first of all, there's no giving back. I haven't taken anything from anyone. What I owe, right? What I owe my subscribers is my best effort to help all of us make money. And, my money is invested in all of these ideas. But I will tell you, there are 2 things I love. One is that moment when I realize, oh, wait, we've got a great investment here. I've seen 20 other things like this. This is how we're going to make money. And finding that thing where we're going to make outsized returns. And we've been really good at that. We've had more positions go up by 100% or more than we've had positions where we've lost money. Now,
Amazing.
Can I maintain that kind of record for the next 5 years? No idea. That's hard to do. We can't offer guarantees, but the methodology is extremely effective, and people who have been, with Deep Knowledge Investing for a while have made great returns. But I will tell you, there is something incredibly satisfying. Every now and then I get a phone call or an email from somebody saying, I invested in this with you and I made a lot of money, and thank you. And, I'm in better shape now. Or, my retirement account is in better shape now. I'm more secure now. And, those moments they're really wonderful for me. Like to know that the thing that I've done, that I've worked really hard at for months and months, has made someone else more secure. And that's very, very satisfying. You know what? If you don't mind, Matt, can I just take us on a little detour? I've got a personal story that explains it.
You know what? This is the Builders, and we tell stories here. So I'm going to let you go where you want to go.
So yeah. I think people often have this mistaken idea that the finance business is bloodless. Even earlier you talked about, oh, you must really like math. But it's really much more about research. This is more art than science. And this might sound strange to people, but the numbers do tell a personal story. And I'm going to prove it to you. Back, I don't know, a couple decades ago, I was starting, Akita Capital with a partner. And we had agreed that we weren't going to have outside positions. And I had owned stock in Atlantic Richfield because my dad had bought it for me when I was a couple of months old. And I just sat there for decades. But, because of this agreement, I had to sell it. And in order to figure out the tax basis for it, I had to call the company and get them to send over the records because there had been so many stock splits that, I didn't know how many shares had been bought originally. And I got this statement. They were very helpful. And I saw that my dad had bought 19 shares. And I thought, wow, that's really weird. 19 shares. Why?
Why
right?
19? Yeah.
Right. It's like, it was this really, really weird thing. And I just sat and I stared at the paper and I thought about it. Now, think about it, Matt. You would have believed 20, right? That's a round number. Like, why not a 20th share? And I would have believed 18. I'm Jewish, and in Hebrew, the Chai, which is the word for life, is also the 18th letter of the Hebrew alphabet. So gifts are often given in multiples of 18. It's a way of celebrating life. So I would have believed 18. I would have believed 20. 19. It was weird. It was just weird. And I sat there and I was staring at this paper, and then I saw it, Matt. I saw that 19 shares of Atlantic Richfield in the year that I was born were $247.50. And I saw it. I saw my dad as a 27-year-old man with a wife and a mortgage and a baby, and he had $250. He didn't have more. He didn't have the extra money to buy the 20th share. And all of a sudden, I saw my dad as this young man with all the weight of the world on his shoulders. I saw him sitting at his desk and the responsibility he must have felt. It had to be overwhelming, right? He didn't start with anything. And I called my dad and I asked him, he's like, that's exactly what happened. He said, I still remember filling out that form. He said, I still remember sitting at my desk and the credenza he had behind his desk. He said, I know where on the credenza that paperwork was. And he said, you're right. I had $250. I didn't have enough to buy that 20th share. And he said, you're right. Like, I was excited about being married. I was excited that you were born. He's like, but it was a lot to take on. And so finance is not bloodless. The numbers tell a story. And with every investment, there is a person doing this. And, people often look at, these giant investment funds and say, oh my God, these evil, horrible finance people, but they're often managing money for pension funds, right? For ordinary people, for grandma and grandpa. There are human stories behind all of that. And when I just like I could see my dad stress, when I'm wrong about something and I lose money, it feels horrible. It feels like I've been punched in the stomach. You want to vomit. It's awful. And the wins, it's exhilarating. And knowing that I've helped people be more secure is a wonderful feeling. But, there are human beings behind every investment.
That is a beautiful story. And I love that. I love talking to people like you that, get that. It's that way with any business, right? Even me running an agency, a web design agency. I love to see the results of what we do. And I think about how we affect, or, how I affect the people of my team, but also other people's teams and their companies, and helping them do better and do more. And we have those wins, we have those losses, but we work hard for those wins. And when you get a message like you did, sometimes get, from somebody that you did something positive for them, where they got a good return on investment or whatever, that's a good feeling. That's the fuel that keeps you going.
Yeah, it is. It's meaningful. It really is. And, I've been on the other side of it too. I've had situations where we had a bad month and I had to call people and say, listen, you're going to get a statement in a week that you're not going to like. I'm right here. Let's talk about it. That's hard to do. Yeah. Especially when people have invested, are friends of mine, and they've trusted me with their money, and we always made it back. We always made it back for people. But it's hard. It's a job where the amount of responsibility is overwhelming. It's not like, we've got 30 people in a conference room. We can say, we're waiting for the specs from engineering. We're waiting for the information from marketing. The product design team hasn't told us what color yet. Like there's nowhere to hide. When I'm right or wrong, we know to the penny how right or wrong I am. And that's a level of responsibility that's, you have to get used to living with.
So this is a perfect transition. Watch this. So for the people out there where things are going wrong right now,
yeah.
Things are going wrong. Things are looking wrong. The economy's not looking good. And I know this in my own business, just my partners or clients and stuff that are struggling, there's some struggle going on out there. Things are being delayed, and for, different reasons, people are holding off on things. And I felt that a little bit, obviously, as a ripple effect. But there's people out there struggling, and I think you'll probably agree that there's always going to be people struggling. But what's different today? What's happening today? Let's start with the dark portion of this. How screwed are we right now?
Pretty screwed. So, look, for the people listening to this, if you have a sense that something's really wrong, first I want to tell you, your feelings are correct. You're not crazy. You're not lazy. One of the things that I love about kind of our national story about being an American, the stories that we tell ourselves, is that story that if something's wrong, just you pick yourself up by your bootstraps and work harder and take responsibility. And I think that's fantastic. I love that. I think that's a great American story that we tell ourselves. And I think that's 99% of the time the right approach. With that said, I think more and more people are feeling like the deck is stacked against them. Like conditions are such that no matter what you do, you can't succeed. Like people are drowning and they don't understand why things are getting harder and harder every year. And guess what, Matt? That feeling is correct. And one of the issues that we have is we don't teach finance and investing and economics in school. So people don't have a background in this. And even those who study economics, they learn Keynesian economics and modern monetary theory. And basically all of those, and tell me if this sounds familiar, they say debt doesn't matter. Deficits don't matter. You can just print more money and pay for whatever you want. And hey, you can print prosperity, right? And if that
sounds good.
Exactly. Yeah. Why not?
Yeah.
Why do any of us work? Why do any of us pay taxes? Why can't the government just print money, hand it out, and we'll all be rich, right? And the answer is because creating currency units does not create wealth. We tend to think of wealth in terms of dollars. And of course we think about that. That's how we were raised. But if that were the case, then printing money would create wealth, but it's not. Wealth is the ability to get goods and services legitimately, right? So printing dollars does not increase the amount of goods and services. It just increases the amount of currency units. And so, this is why all of the Keynesian economics and modern monetary theory, MMT, that stuff is all nonsense. And that is what's being taught. And if you have a job at the United States Federal Reserve, that is what they all believe. Right. That is, and in my opinion, one of the greatest injustices from the Federal Reserve from Congress was not seating Judy Shelton a while back. We talk a lot in our government about diversity, but why was it somehow wrong to have a woman who believes in hard money? She wanted the dollar to be backed by gold. We can't have one hard money person at the Federal Reserve. It's out of bounds to have somebody
just think they're a crackpot if they're talking like that.
But she's not, and hard money is absolutely not a crackpot idea. And so, let's talk about history for a little bit, Matt, because and then we'll get to how that history applies to what we have now. There were two big events that caused the pain that people have at the moment. One is the creation of the Federal Reserve in the early 1900s. The other was the 1971 decision by President Nixon to take the U.S. off the gold standard. Now, the reason Nixon had to do that was because the United States had printed so many dollars that it exceeded the gold that we had in the Federal Reserve Bank in New York and in Fort Knox. We didn't have enough gold to back dollars. And so other countries were saying, yeah, at $35 an ounce, here are your dollars, we'll take the gold. And when the supply of gold in the United States had been cut in half, Nixon realized, wait a minute, we don't have enough gold to cover this. They had overspent and overprinted. And so he took us off the gold standard. And these are the things, once you have money controlled by the government instead of by hard assets. And hard is simply, when we talk about hard assets, we simply mean hard to replicate. So the supply of gold goes up by about 1.5% a year. Some years a little more, some years a little less. Bitcoin right now is harder than gold. You have roughly 450 Bitcoin being mined a day. That inflation rate is less than the inflation rate for gold. Those are hard assets. The dollar, on the other hand, they're printing an extra $1 trillion every 100 days, and that's just the on-balance sheet number, right? So what we're talking about is the difference between hard assets, things like gold, silver, Bitcoin, oil, all kinds of commodities, things that are difficult to replicate. Real estate would be a hard asset, versus fiat currency. And fiat is just a fancy way of saying a government-sponsored currency. So that would be the US dollar, the British pound, the euro, the Japanese yen, the Mexican peso, right? The Spanish galleon, if we go back a few hundred years, right? All of these government-sponsored currencies are fiat currencies. Now, in history, there have been 775 fiat currencies, and they all end the same way. They all go to zero.
Awesome.
So if you're listening to this and you feel like, wait a minute, I'm getting screwed, the deck is stacked against me, you're right, because it all goes to zero. And they all end the same way, with overexpansion, war, and debt, right? And we are at the bread and circuses part of the show. Our government is overspending by about $1 trillion every 100 days. That's the on-balance sheet number. If we take the off-balance sheet number, and that includes things like Social Security, Medicare, Medicaid, the Affordable Care Act or Obamacare, pensions, you'd have to double that number. The off-balance sheet liabilities in the United States are over $200 trillion. Add to that the 36 trillion of on-balance sheet debt. We are at almost $250 quadrillion in debt. So when people say, why can't we just, print more money and pay for it? Or, why is the dollar not worth as much? This is why it's happening, because they just keep printing and spending. And so these people should know economic history, But this is, this is what happened with Rome, Spain. Even if we take a look now, every empire, the longest running fiat currency in existence right now is the British pound at about 350 years. In that time, that currency has lost 99.5% of its value, of its purchasing power. At what point can we call that a failure? Right? Now, the US dollar is number two. We've been around for about 250 years, give or take a little bit. The US dollar has lost something like 96% of its purchasing power since 1800. The vast majority of that, over 80% of that loss, has happened since 1971 when we went off the gold standard.
Wow. I've never, and I'm not really a finance guy, but I've never understood how we came off the gold standard and how the dollar's valued and why we keep printing money. But like, how is it? Just somebody just decides what the value of the dollar is, or it's based on all these factors and it's just going, and you just keep flooding more cash into the system, it just devalues. I was just talking to a guy, actually he was on my podcast last week. He's from Argentina. He was talking about their 300% inflation and that's why they have to go outside their country to do business. But are we headed there? Is that, I mean, is there, because I don't see the government stopping the spending. I don't see that as an easy thing to do. They like it too much. Right?
That's right. Yeah. That's exactly right. And by the way, everybody knows Argentina as the country with this unbelievable inflation and, they've defaulted on their debt, I think 15 times in the last however many decades. I mean, it's become a running joke. I've spent time there. I spent a month there a year ago. And I've been there before. I have friends in the country. It is a beautiful country with great natural resources, an educated population, but their economy has become an absolute disaster. And one thing that a lot of people don't know, less than 100 years ago, Argentina was the wealthiest country on the planet. This is how bad life can get when your government overspends. So in the US, if we want to go through the history here, there were a couple of things that happened that really changed the trajectory. One was the creation of the Federal Reserve, and that made running these insane deficits, possible. Then what happened was Roosevelt, FDR, decided to confiscate Americans' gold. And what he did was he said, okay, everyone, you have to turn in your gold. You don't have a choice. It is now illegal for Americans to own gold. And he said, but you have to give us your gold at a certain price. And I don't remember exactly what the price was. It was something like $25, $27, something like that per ounce. And if I'm wrong on the number, somebody can, correct me in the comments. I don't remember the exact number. And then what he did, as soon as he had confiscated all the gold, he revalued it. And said, okay, now the price of gold is $35 an ounce, which meant that the value of the dollars that the government had just given you was devalued by roughly 40%. Okay? This was theft. It was legal, but it was absolute theft. The government confiscated the value of every gold owner in the United States and said the U.S. government will have a monopoly on this. Then what he did was he said, okay, we're going to have the New Deal. Now that seems like a good idea, right? We're going to have a social safety net, Social Security. We're going to care for people. Okay, terrific. These are good, noble ideas, but the problem is that's a lot of spending. And so the government started to spend more. And, the deal with that spending is instead of spending money on roads and bridges and another Hoover Dam and infrastructure, we were spending on consumption.
Yeah, and that's throwing it to the wind. Yeah.
That changes things. And the thing is, listen, if you're listening to this and you want to say, hey, wait a minute, but we should take care of our elderly and our poor and our sick. Okay, fine. You're entitled to that opinion. But I'm just pointing out at some level, you end up having to pay for it one way or another. And the way this was paid for was by more debt for consumption, and the government got larger. Now, the next thing that happened was you had Lyndon Johnson, who also pressured then Federal Reserve Chairman Arthur Burns for lower rates, literally by picking him up and slamming him against a wall. This was how the president treated. I mean, can you imagine, somebody picking up Jerome Powell and slamming him against a wall? But this happened in the 1960s. And, so Johnson wanted the Great Society. Okay, so we're going to expand the welfare state. Now, again, if you're listening to this and you would say, okay, but fine, I'm in favor of that. We should help our poor. We should help the sick. We should help people who need help. Fine, you're entitled to that opinion. But again, what we have is the size of the government expanding exponentially and taking on more debt. And again, it is for consumption, not for investment. And so the way all of this was paid for was the US was printing more dollars, and we took on more debt. And at some point, then President Nixon realized, wait a minute, we got a problem, because France was saying, yeah, here are your dollars, give us the gold at $35 an ounce, which, you'd take that deal anytime right now. And, we had a situation where the gold supply of the United States not only had been depleted by half, but we also had the issue is there were more dollars outstanding than we had gold to back it, right? Which is why when originally the US dollar was backed by gold, and it said that. Now, okay, Matt, here's your quiz for the day. What's the US dollar backed by now?
The promise.
Faith and credit.
Faith and credit.
Faith and credit, right. So on the credit side, I'm going to tell you $250 billion of liabilities. So that to me is, a failure in terms of credit. Faith, if you're listening to this and you're going to bet your economic future on faith in the U.S. government, I wish you well. That's, I don't know what to tell you, but
well.
Yeah, don't count on that. So, Nixon takes us off the gold standard, which was, both wrong and necessary, if that makes sense, right? It was a horrible thing to do, but what else was he going to do? At some point, we would have had to default because as long as the dollar was backed by gold and we don't have enough gold, that's a default. He prevented a default of the dollar by delinking it from gold. Well, now what happens? Let's fast forward all the way to where we are now, and talk about how things have changed over the last few decades. So, Matt, when you and I were young, the government paid for most of its expenses through taxes. And now listen, I am not in favor of big government. I don't like paying taxes. I do pay taxes. I fill out my forms every year.
Doesn't mean you have to like it.
Right, exactly. But in general, like if you want to know where I stand, I like small government. I like low tax bills. That's my personal preference. If you're listening to this and you have different preferences, that's fine. You're entitled to that. Okay. And what used to happen is we'd get around April 15th and people would write a check to the government. And depending on the size of that, it forced really uncomfortable conversations about the appropriate size of government and how much we were willing to spend for these various programs. And we felt that discomfort when we wrote that check to the government, right? And theoretically at the time, what we could do is say, okay, well, I'm good with the government at this size, and I feel like I'm getting good value for the taxes I'm paying. And so I want to support, the people who are in government now because I like what they're doing. And, the people in the house next door might say, wow, the government is too big. This tax bill is too big. I like the idea of, us helping people, but not at this price. There's a value issue here. And I want to vote for somebody who's going to make the government smaller and we'll have a lower tax bill. And by tying people's discomfort to policies, to politicians, we had a way of expressing the direction we wanted the country to go. And that is a reasonable and reasonably healthy way to have a national conversation. Literally one dinner table at a time, families sitting down with a checkbook, figuring out what they could afford, what they wanted to afford. And then expressing that happiness or discomfort at the ballot box. That's a reasonable way to do things. That's not what we have now. So where we are right now is our government has decided to fund massive debt with inflation, right? So, we used to have compromises in Washington where, okay, Matt, I'll get a little of what I want. You get a little of what you want. I'll give up this. You give up that. We'll, arrive at something where, everybody gets something. Everybody gives up something. But now compromises in Washington are, okay, hey, Team Blue, this is your list, everything you want, great, you can have everything you want. Team Red, here's your list, you can have everything you want. We're buying guns, butter, bread, circuses, everything everybody wants. And the current plans seem to be that we should also and can also pay for the rest of the world, right? Now, somebody might say, but I want us to do that. Okay, great, but how are you going to pay for it? And so what's happening, and this is where so many of you are feeling discomfort, what's happening is the way we are funding these massive multi-trillion-dollar annual deficits is by money printing. And the reason that they're doing that is because it allows them to hide the true cost. So instead of paying taxes, we just have more dollars chasing the same number of goods and services, which causes inflation. It causes prices to rise. Now, when people talk about inflation, we think about higher prices. And what I would encourage everybody to think about as we talk about inflation is think about it as loss of purchasing power of the dollar, right? So if you have $100 or $1,000 in your bank account today, you could go out and buy a certain amount of goods and services. But now, Matt, think out a year, 3 years, 5 years. Are you going to be able to buy more or less with that $100 or that $1,000?
Less, of course.
Exactly. So why does the government do this? And the reason is because it allows them to avoid the hard choices of trade-offs. Instead of, okay, we'll give up this, you give up that, we'll spend money on this, we won't spend money on that. They're basically saying yes to everything, running massive deficits. And when we get the bill, because again, you cannot print prosperity. Creating more units of dollars, creating more fiat currency doesn't create wealth. It doesn't create prosperity. It doesn't create goods and services. It merely makes the purchasing power of your dollar decrease. But the reason they do it is because it allows them to blame everybody but themselves. What do? They blame President Putin. They blame COVID. They blame supply lines, they blame supply chains, they blame fuel prices, they blame
all those things.
They blame Kroger for the price of milk. Kroger's 1.4% net margin is causing you to pay more for milk.
So is the sole and the actual reason for inflation right now is just that printing of money, and it's like a runaway train at this point. It's like there's no stopping it. They just keep doing it. Because it's almost like a drug. They can't.
It's exactly like a drug. Yeah. It is absolutely national heroin, which is what we have. And just to give people again a little terminology and a little economic history. So now we were just talking about this. When people talk about inflation, we think about the price of goods going up. Okay, fair. And I've just rephrased that as loss of purchasing power because I want people to think about it in the way that really affects them. But the original definition of inflation was an increase in the money supply. That's the real definition. So when they increase the money supply, that's the real definition of inflation. And, I'm so sorry to tell people this because this is what I'm about to say is a really uncomfortable truth. We can't vote our way out of this.
This isn't changing. This is the new normal.
That's right.
Yeah.
And if we take a look, every president has spent more than the president before. This goes back into the 1970s. It doesn't matter whether they're Republicans or Democrats. And we've had every combination, Matt. We've had, Republican presidents with Republican Congress, Republican presidents with Democratic Congress, and the inverse, Democrats in the White House with Democratic Congress, Republican Congress. And the one thing that remains consistent is spending always goes up. I'm not going to tell you that this election in November doesn't matter. I think it does. There are a lot of issues that affect the country. There are a lot of issues that matter. People should go vote. You should make your voice heard. I'm strongly in favor of that. But unfortunately, there is nobody that you can vote for in November at the federal level, whether it's for Congress, Senate, the White House, who is going to cut spending. Every administration takes the previous level of spending as a baseline and spends more. So the one thing I can promise all of you is we are going to see more long-term inflation. Now, could we get a recession, a depression, stagflation that will temporarily reduce the price index? Sure, that's definitely possible. But if we think out over the next 5, 10, 20 years, the one thing I promise you that I'm 100% certain of is we are going to see more inflation. And what that means is it is impossible to save in dollars. The kinds of things that they told you to do, save money, build a bank account, that will not work anymore because you will be saving in fiat currency units, in dollars, that will lose their purchasing power on an annual basis. And so let's go back to where we were at the beginning of this conversation, Matt. For those of you who feel like something is wrong, the deck is stacked against me. Why? I'm working my rear end off. I'm working 2 jobs. I started my own business. I'm working 16-hour days. I'm working 7 days a week. Why can't I get ahead? This is the reason. It's because you can't save in dollars. Everything people told you, they meant well, and it might have been true when they learned it, but it's no longer true. And
you certainly can't, like, even, a savings account is a joke. Yeah. But my wife and I were just talking about our money market at Carlin, and we're like, how much was that again? What percentage? It's like that's not a long-term place for that money.
Right. And by the way, like people look at the CPI, the Consumer Price Index, to know, like when people talk about inflation, that's typically what they talk about. That CPI is not accurate. There are, and we can go into this another time if you want. I can unravel for you. It's a long conversation for another day, but I can unravel for you at another time why the CPI is inaccurate. And it's intentional. It's intentional. And, for people who are skeptical, and that's fine, be skeptical. But the Bureau of Labor Statistics, which produces this information, is telling us that grocery prices are up between 1% and 2%. So, if you're listening to this and your grocery bill is up only 2% in the last year, please put it in the comments. I want to hear it, because the next person to tell me that is going to be the first person to tell me that. I don't know anyone who believes that food inflation is only 2%. So the point is that they tell you that inflation is 3%. It's much higher. Unless you're earning more than that, you're losing purchasing power in dollars. And so for those of you who are frustrated, upset, sad, and feel like you can't get ahead, this is the reason. You can't save in dollars. You're going to lose purchasing power. And that more than anything else is why people are struggling now, because the prices keep going up. And the reason is because we are funding everything and anything and pretending like the bill will never come due. And, Matt, this is the equivalent of, spending every dime that you make and then maxing out your credit cards. And then when the bill comes due and all of a sudden you can't afford anything, saying, how did this happen? That's what our Congress is doing, right? Where they would look at us individually and say, well, of course you're going to declare bankruptcy. You're irresponsible. They blame you, reasonably so. That is on you if you live your life irresponsibly. But why isn't Congress held to the same standard?
Yeah. It's crazy.
So that's why I have a ton of sympathy for people who feel like, why can't I get ahead? I am working as hard as I can. And this is the reason, because everything people told you about this is not accurate.
So basically, there's not a whole lot we can do in terms of changing that situation, but there are things. Let's pivot to the positive.
Let's do that
part of this.
Let's do that.
What things can Gary tell us? That can make us feel better about this, and how we can approach things in a better way to battle this or to counteract this, I guess.
All right. So first, let's talk about mindset. Everything I've described is not your fault, but dealing with it is your responsibility. If you want to get through this, okay, we can't vote for candidates in November that are going to say we need to have a hard dollar. We're going to start backing our dollar with gold or something. That's not going to happen. More inflation is coming. More of what's hard is coming. The only way through it is even though it's not your fault, it is your responsibility. If you want to get through this, okay, you are going to have to take action. So let's talk about the things that can be done, and let's work from like the really simple level and then get to slightly more complicated things. Because the first thing you have to do is take care of your own home. Now, the thing that people will tell you is, well, you know, cut spending. And guess what? That's actually not a bad idea. Now, I know I just told everyone you can't save in dollars. Your purchasing power is going to go down. But it is important to have spending levels that match what you're making. And ideally, you want to spend less than you're making. And if you can make cuts, it's a good idea to do so. Now, I'm not saying, you know, live on the street or don't eat good food. You know, just find ways, even little things. It does matter. But let's talk about things you can do at home. One of the things we saw during COVID is how fragile supply lines are. And so having some sort of security at home will really help. And you know, that is having stores of food, and it doesn't have to be expensive stuff. Go to Costco and buy 20-pound bags of rice and beans, you know, cans of tuna fish, toilet paper, paper towel, cleaning supplies, right? You can have supplies of this stuff. And if I'm right, it'll save you, and you will feel better and more secure if you have at least a few months of food there. It will get you through horrible times. That is the first place to build security. Now, if I'm wrong, then okay, you know, a year from now, you'll have some extra tuna fish and you're going to find interesting menu items to make from that. But, you know, I promise you, toilet paper isn't going to go bad. The shelf life on, you know, a 20-pound bag of rice is years. So build some food security in. Have some barter security, things like whiskey, chocolate, sugar, flour, salt, coffee. These are all good things to have stores of. Again, worst case scenario, you just lock in today's prices. These things have multi-year shelf lives, maybe not the chocolate, but other stuff. But being secure at home, knowing that you can feed yourself, knowing that if the dollar really does go sideways, and, you know, by the way, these attacks on supermarkets saying, you know, we're going to tell people how much money they can spend. How much money supermarkets can charge. That leads to shortages. If you want to know where that goes, look at Venezuela. You will have empty shelves. You don't want to be caught without food in a black market economy. Okay? So that's the most basic thing. Now let's talk about ways that you can save. Because let's say, you know, someone says, okay, wait a minute. Things are bad, but they're not that bad. And I do have some money to invest. And I've got money in, you know, in a CD, a checking account, a savings account. Great. But you can't save in dollars. So for long-term savings, I like things that are harder. Harder means harder to replicate, harder to increase the supply. Silver is okay. I prefer gold. I'm a big fan of Bitcoin. You don't need to own a ton of it, you know? And for those of you who are skeptical, saying, hey, I don't know, it's not based on anything, I have two responses for you. You know, one, the dollar isn't based on anything either. Like, why you can be skeptical of Bitcoin. My question is, why aren't you more skeptical of the dollar? And if you've listened to this whole show so far, you should be skeptical of the dollar. Second, you know, fine. Take a 1% position. Take 1% of your portfolio, buy some Bitcoin. I highly recommend self-custody for people who are afraid of that, who don't know how to do it. Do not panic. I've written a guide. It is a simple, basic guide. I actually put it up on Twitter. And yeah, I can send you the link. And people can see, but literally it is, you know, fill out this thing, click here, point here, you know, push this button. We've made it really simple for people, but self-custody does matter. You should have some assets outside the system. Now, people might say, okay, wait a minute though, you know, the price of a gold coin now, you know, with gold at just under $2,600 an ounce, the price of a gold coin might be in $2,700, $2,800. Maybe somebody doesn't have enough to buy all that. What do? No problem. You can buy ETFs. That stands for Exchange Traded Fund. So you can go into your brokerage account and buy a gold ETF. GLD is one of them. I'm not endorsing it. I'm just telling you that's an option. And so you could, you know, take $25 a week, $50 a week, you know, $100 a month, whatever it is, and buy a little bit of gold every week or every month and do that year after year and start to save in gold, or stack sats, right? Satoshis. You can buy, right? Somebody might say, hey, I don't have $60,000 to buy a Bitcoin. That's fine. Buy fractional. It's fine to buy fractional. You can go buy Bitcoin $10 at a time if you want to. Put $10 a week into something. My one huge caution here is, please, I'm begging you, do not keep your Bitcoin on the Bitcoin exchanges. We've seen the Mt. Gox that hack. We saw what happened with FTX. If you're not familiar with any of that, don't worry. The expression is not your keys, not your coins, self-custody. Again, if it's confusing, if it's scary, don't worry. We've written a guide to it. It's just scary, but it can be done. And if you're willing to spend an hour learning about it and doing it, you'll be done, and you'll be done with it. And that it really is that simple. Now, for people who want to get a little more complicated, as the value of the dollar decreases, oil and energy tends to be priced in dollars, and the demand for energy is not going down. The demand for energy is only increasing. Matt, there is the correlation between a high material quality of life and energy usage is almost 100%. And roughly almost half the population of the planet lives in China and India, and I can tell you those people want a better material quality of life. That means more energy usage. So, given that oil is priced in dollars, I like owning oil companies. We've got a list of them on the Deep Knowledge Investing recommended list. I also like uranium. Nuclear, for those of you who want carbon-free energy, nuclear is the only way it works. I know everybody's very excited about solar and windmills, but when you look at it, it's not practical, doesn't work, it's too expensive, it's not reliable, and ready for this, it's also horrible for the environment. When you look at the whole life cycle of those beginning to end, nuclear, on the other hand, is highly reliable energy. It's also carbon-free. That's the way through this. You can buy uranium. And again, there are ETFs, exchange-traded funds, where you can do that. And so these are all ways to play the reduction in purchasing power of the dollar. And, I can't tell you how much tuna fish you're going to be able to buy a year from now, or what the price of a new car is going to be a year from now. But I can tell you the purchasing power of your dollar will be lower 5 years from now and 10 years from now. So start buying things that, when priced in dollars, will hold their value, right? And so I've just given you a list of things that you can do to protect yourself from the bad thing that's coming, that we're experiencing. So there's no sense in being upset. There's no sense in crying about it. Get to work. And these are things that you can do to put yourself in a better position as the dollar loses value.
That feels like a very positive place to land. I think the takeaway here, the biggest takeaway, is things aren't going to change. They are the way they are. They're not going to get better. The dollar's value is going to continue to drop. They're going to continue to spend. So you got to take control of it. And what you described just now are things that we can invest in that will hold their value more and offset all this. It's amazing. So as I'm listening to all this, I'm thinking that we could fracture this entire conversation into like 100 different conversations and dive into these different topics. Are you going to be a regular on this show?
I would be happy to. You know what? Like I said, you said you like stories, and people, again, they think about finance and economics as like bloodless and unemotional, and it's just math. Absolutely not. There are stories behind all of this. And when you look at the economic history and how we ended up here, and the crazy thing about all of it, Matt, is we see these things playing out in the exact same way. The same reasons and mechanisms that caused the Roman Empire to fail were the exact same things behind the Spanish Empire failing, the British Empire failing. They're the same things that we're experiencing here in the United States now. We see these same cycles, these same patterns, these same behaviors, and the same outcomes across thousands of years. Human beings we are remarkably consistent in our flaws and our errors. And so
that's why we need AI to come along and just fix us.
Yeah,
let them put that in charge.
Unfortunately, AI is simply the accumulated pattern recognition of what is already written. So
good point. Yeah.
Right? AI will be reading Keynesian and modern monetary theory economics and say, "Oh wait, we can do more of this."
Could be just as confused as we are.
Yeah. Exactly. But look, these cycles play out over time, and it is sad and it's disturbing, and it causes a great deal of human suffering and discomfort. And, if there are real stories and real people behind this, it's not just statistics from the Bureau of Labor Statistics or, the Commerce Department or the Federal Reserve. And I read those 30-page reports. I do it so you don't have to, but yeah. But there are people behind all of this, and there are stories, and these policies do affect people. And, while it's upsetting, my message to people is don't despair. There's no point in being unhappy about it. There's no point in being upset about it. Don't focus on what you can't change. Take responsibility for what you can and start to do the things that you can to protect the purchasing power of your savings across the next decade, across the next 2 decades.
Perfect. Good place to land.
All right.
Thank you, Gary. So if somebody wants to learn more about what you do, whether that's what you do at Deep Knowledge Investing or how they can reach out to you specifically or find you on the World Wide Web, if you're hanging around LinkedIn and stuff, where do you hang out?
Yeah, so on Twitter or X, it's Gary_Brode, Brode. Please feel free to check out the Deep Knowledge Investing website. It is at deepknowledgeinvesting.com. There's a subscription tab there. There is a free subscription option that, you can see some of the macro posts, the general stuff that I write about, to have access to the stocks that I'm investing in and those research reports, that we do charge people, but we've kept it really reasonable for individual investors. And the people who've been with us for a while, I think have done really well. They've made a lot of money. We've had great returns for them. So if you're interested in that, great. And, if people have questions or you want to reach out, you can email me at ir@deepknowledgeinvesting.com. The IR is for investor relations, and I read everything that comes to that address.
Fantastic. Well, thanks for joining us, Gary, and thanks for all your insights and taking us on that journey. And I will say until next time, I hope to have you back someday.
Sounds good. Thanks so much, Matt. I appreciate it.
That's all for today's episode. I hope you enjoyed that. Again, please subscribe if you haven't already and give us a thumbs up if we deserve it. Now a word from our sponsor, my agency, Unified Web Design. We build custom websites, features, we maintain websites, we work with agencies to fulfill their web design and development needs, and more. If you're interested in our services or are looking for an agency to work with as a partner to build awesome sites for your clients, feel free to reach out to me at unifiedwebdesign.com. There's a handy contact me link at the top. Fill out that form and it will open a ticket, and that ticket will find its way to me. Thanks for joining me today. We'll see you next time.